Welcome, everybody, to another episode of the Ag View Pitch. Today, we have Chad Hart, ISU Extension Economist, with us with all kinds of wisdom, I hope. How's it going, Chad?
Going well. Hope you can say the same.
Yeah, going good, going good. We're entering the August 11th through the 15th. We're already to the middle part of August. And so I want to start the conversation around, we were having a little conversation before we started recording here on just crop conditions. And I did a video that you had seen with Lewis Stearns, just kind of on fact versus fiction. And so, the thing, and I literally spend zero time on social media, but I hear about it. And I was hearing, tassel wrap issues, derecho problems, too wet, too hot at night, all kinds of things that I think we're all grasping for as farmers of, is there anything that can move the market? So let's stay on the crop condition side of it for a minute and kind of ask you what your observations are, because I want to tell you that as I've driven all over a lot of different states, this is probably, at least from the road, admittedly not been in very many fields except my own, but from the road, this looks like the best crop I think I've ever seen. So talk about crop conditions, what you're seeing, and what your observations are.
Well, that's the one. I'm going to confirm sort of what you've already said. As you're looking at what you've seen, it looks really good. If we think of what USDA has been saying through the crop progress reports over basically the course of this growing season, they show this as an above average looking crop. Not necessarily the best rated crop we've ever seen, but a really strong looking crop. And that's leading everybody to these estimates saying we're at least trend line, if not, significantly above trend line as we look out there. And while we've heard about a bunch of problems, as you mentioned, the issues may be, weather related, wind related, disease pressures, pollination problems. We're seeing them out and about, but they don't seem to be large enough to really change anybody's mind about how this crop is looking in aggregate. So, for both corn and soybeans, we've been sort of struggling with this. And so that's what's leading a lot of folks, I think, to think as we look forward to USDA releasing the August WASDE report that we're likely going to see them adjust both corn and soybean yields higher based upon that consensus viewpoint right now that this is a incredibly good looking crop in aggregate.
Hmm. Um, Not to put you on the spot, but to ask, you know, we've got all these yield guesstimates out there, right? Including the USDA. I mean, it's they're educated surveys, guesses, whatever you want to call them. And the combine always has the answers, but that's going to be a while yet. And so we just use our best information that we have. Admittedly, USDA has got the biggest data set. Even though we can yell at them and scream at them and do whatever we want as farmers, isn't going to change anything anyway. And the market's going to trade those numbers. What do you think the market's trading right now in terms of bushels on corn and soybeans where these prices are at? Do you think they're trading a 185, or do you think, we got to wait and see what the USDA says? Where's your mind there?
My own sense is that they're probably trading in that 184, 185 range when it comes to corn. That said, though, I mean, I know in looking at some of the models I've used in the past to try to project what national yields will be, they actually want to project higher than that. But again, even at USDA's trend line right now of 181 bushels per acre, that would be a record yield. And one of the hardest things to do is pin down a number on a record crop before that crop comes in. That was one of the problems if you think back to last year at this time. USDA was wrestling with a very good looking crop back then as well. They went up to 184 bushels per acre back then, but what we also found was that crop at the very end lost a few bushels, and I think we all know how they lost it. It's basically that crop in aggregate came in drier than usual.
Mm-hmm.
Instead of coming in at that 15 to 16% moisture we were used to, I remember talking with a lot of farmers telling me they were coming in at 11, 12, 13%. And when you take that much moisture out of a crop, it can reduce it by several bushels. And that's what ended up driving USDA's numbers down to 179 last year. So I think we're also a little bit leery of putting too high a number out there right now because we know things can still bring this crop, shave that bushel down a little bit.
So talk about soybeans in that same breath. Where do you think the soybeans are being shaken out at? Because it seems like, the driver there is just no demand, but, we also got to take into account the crop as it relates to potential production. Any thoughts there?
Well, that's the as we look at soybeans, I would say from the crop conditions reports we see from USDA, we're seeing that same sort of thing as with corn. It's been looking better than usual. That tends to lean to trend line yields are higher. Right
Mhm.
now, USDA's trend line's 52 and a half bushels per acre. So it'd be an incredibly strong crop. And in fact, given where we're sitting with acreage right now, this year's soybean crop may be just as big as last year's. So we know in both cases for both crops, we're staring at, with corn, a record crop potentially coming down the line. For soybeans, not quite a record, but it would be within the top five.
Mm-hmm.
And so both crops are looking very strong on the production side, which brings up, yeah, the question of will we be able to find enough usage to chew through these crops to allow prices to move forward?
Mm-hmm. Let's talk about the report for a minute. Is there anything to manage pre or post that report? If you put your farmer hat on, I mean, it all almost feels like we have a pretty deep um, perspective or idea, anticipation of what's going to happen. Is there any surprise that we need to navigate or surprise we need to watch for? I mean, there'll be people watching this after the report, so we'll get to see how good your crystal ball is if it's clear. But listening to it in front, is there anything on the front end or anything to kind of watch for that could be a surprise?
Well, I mean, I think we could see some surprises there, but at the same time too, is are there surprises that we necessarily want to make a move against? I'm not sure in that case. When you think about it, here in August going into early September, these tend to be some of the lowest prices we see all year. From a seasonal perspective, now's not a time when we tend to want to have to make moves.
Mm-hmm.
Or what moves we make here tend to be because we know we're going to have more than we can store, more than we can push further down the line to try to improve prices on that. So unless I have to make a move in preparation, I'm probably not looking to do that. But when we're looking for surprises, I think in this case we do know we're going to see adjustments on supplies. Um, USDA is going to update the acreage based upon the FSA planted area reports. I think we could see them knock acres down a bit because if you think back to planting, we did see especially the eastern corn belt having more moisture to deal with than usual. Delayed planting that could have knocked a few more acres out than what showed up in NAS surveys. That will also lead to reductions in harvested area. But I know, given what we just discussed with crop conditions, that we expect yields to go higher, probably more than offsetting that. So I know we're dealing with, again, large crops. To me, what I'm watching for are the changes on the demand side. What do we see them do? Not only, looking at the new crop, but I'm watching what are they doing old crop wise and how does that set us up as we're looking new crop? For example, if you think about what USDA has been doing old crop for the past 2 months, 3 months here, they've been adding to those export totals. We have been seeing really strong international sales over the past 8 to 10 months, especially for corn. And given the weekly data I've been tracking with, it looks like they're going to have to push that higher again. What I'm watching to see is not only am I looking for them maybe to raise it in 2024, but I'm watching to see how much follow through do they have on that for the 2025 crop. Do we see them showing a strong follow through here? And one of the encouraging signs is if we look at this past week's export sales data, it shows a really big jump in advanced sales for corn, putting us back up to where we had been back, say, 2020, 2021, in terms of those advanced sales going into harvest.
Hmm. Okay, so I guess, there's a whole bunch of stuff I want to ask you about here, but I'm gonna narrow it down to a couple of key questions that I think is important. And I kind of gave you a heads up on this one question I'm going to ask, which is, what are the biggest drivers that are influencing commodity trade right now? Because it seems like, well, it doesn't seem like it, but you look at the sentiment of farmers right now. It's not very good. Cost of production significantly higher than the price opportunities. I would say that we're going to have a lot of producers that are going to have maybe their best yields ever and still not make any money, and still go backwards in some cases. What's driving these commodity prices? And I know there's a list, and so I kind of want to talk about it, but I want to get your 2 cents of what are kind of the key things that are driving these what we would call low prices, at least with respect to what our cost of production is on the other side of the equation.
Well, yeah, I mean, it's like, as I look at it, I see us as having one, we know we're dealing with large supplies, have been for a while. And those large supplies have overwhelmed what is actually pretty good demand right now when we're looking there. And one of the things I know in studying not only the markets, but if you look at farm incomes over the past 40 years, what we tend to find is farmers do better with a low yield, high price environment
Mm-hmm.
than they do with a low price, high yield environment. And we're in that second category right now. What that tells you, though, too, is that when we tend to see boosts in production, it tends to weigh fairly heavily on the market. Yet, if we're a little light, we can get good price movement then. And I think the challenge, as we're looking at the corn and soybean markets, is we know we're dealing with high yields, heavy production coming into the marketplace, not only this year, but let's face it, the last several years in a row, we have seen strong productivity across the corn and soybean complexes.
Mm-hmm. So a couple of things I want to ask you about is as it relates to this question is, it feels like to me, and maybe you can correct my thinking here or quantify it, is that we've got all these algorithms now, we've got AI, we've got all these other things trading in the market. And like you said, we've got a great crop coming on, and it just feels like, you know, news happens so quick that the traders can't even trade it. I mean, they got to have their algorithms doing stuff anymore, it seems like, to be able to buy and sell and to create their margins. But you've got the funds entering into it. You've got these great crop ratings. I made a list. You've got technical drivers, and you had brought up another one I hadn't thought of, which is uncertainty in the market, tariffs, all this other stuff, which markets don't like uncertainty and demand. Talk a little bit about those things. Are we in a different paradigm? Are we in a paradigm shift from how the markets used to trade to how they are going to trade, maybe moving forward? And seasonalities might or might not be as important because, I'll give you one example. February was the high so far. And it's, you talk about frustration for producers. I'm going to wait and I'm going to sell not in February. I'm going to sell when there's a spring or a summertime weather opportunity, and we never had one.
Yeah.
Um, it's a little bit of that, but I still think there's these algorithms, there's all these other factors. Talk about, am I crazy? Am I seeing something? Is there a paradigm shift, or is this just the reality of the year?
Well, I'm going to argue ag markets are always evolving. And so it's not that it's a hard shift from one way the markets react to another. But I think you're right that the idea is that, AI and things like that have been building in. But another thing I'll bring in here that's sort of changing the dynamics of our markets is you can think of it as our markets have been historically much more domestically oriented. We're reacting to the news, what's happening here within the US.
Yeah.
I think as time has gone on and as global production has continued to grow, we're having to shift our focus to be more globally centric here, especially in the case of, let me pick on soybeans. If you think about, the ending stocks that we've been carrying now for almost a decade, those would have been considered incredibly tight, driving prices significantly higher. Yet here we sit today, soybean stocks estimated, well below 400 million bushels,
Hmm.
and yet the market's languishing in the, high nines and low $10 range. What's changed? Well, I would argue what's changed is while the US is a tight soybean market, the global market is not. The global market continues to see surge in overall production, especially coming out of South America. And that global feedback is coming back into the markets and is changing um, the timing, the traditional timing within our markets. It's changing the seasonality over time. And so I think we're seeing things like that. And you bring up, especially in this year, when we look at, yeah, we set that high February into early March for crops. I think when I'm looking at what we were seeing there, it looked like we were trying to start to build in that normal seasonal pattern that we saw or usually see. But this year, we sort of got hit with the double whammy. To me, it was right at the end of March, going into April, when the markets got two big pieces of information that sort of shut down the seasonal run we were on. And you can think of that being the planting intentions report coming out right at the end of March, followed very quickly by the Liberation Day announcements of the tariffs and the on again, off again tariff uncertainty we have lived under ever since. So, what you had were two big news stories that play upon two of those big factors that you mentioned that have disrupted the markets, basically coming back to back to put the market on its heels.
Hmm.
And we really haven't recovered since then.
Well, and it feels like the funds, follow trends too. And so we started this snowball a little bit rolling down the hill and then just kept piling on too, you know. So,
Well, but it kept getting reinforced.
yeah.
The tariffs, the uncertainty continued to roll forward. The crops continued to look very strong despite the problems we were finding out there. And so there was always a fundamental piece that the funds could, that kept them going as opposed to having them pull back for a while.
Mm-hmm. For sure. So, as we get closer to wrapping up, I want to talk about some specifics on the farm for a minute and just a little perspective around practical decision making at the farm gate. And you had made a comment earlier, which is 100% right, is there's a lot of producers that either have nothing or very little sold. Compound that with production that might exceed or probably will exceed many producers' ability to hold it all and are in a position of having to make some decisions on flat price and basis. And I want to start with flat price first. If Chad puts his farmer hat on and he's sitting there with, I don't know, 20% overproduction, which is a good thing and a bad thing, right?
Hmm.
So you're sitting there with that extra percentage and you don't have any of it priced yet. Talk about flat price first. What are you watching? I don't expect you to say this is the price I sell it at, but what are you watching? What are your timing scenarios? Because it's probably that first week of August when all this stuff, or excuse me, the first week of October when all of this stuff starts to hit an effect basis. But let's stay on flat price for a minute. Any thoughts, perspective there with your farmer hat on?
Well, and you brought up the basis already, and I'm a little worried about basis as we look there because you mentioned, probably take that hit 1st of October. I think we're already facing some pressure in some parts of the country because,
Mm-hmm.
some of this old crop is still trying to clear out of the marketplace. And so that basis erosion has already occurred in some areas. So it's
Mm-hmm.
a little too late to get in front of that now. Um, if I'm looking at that overproduction, especially if I know I just don't have the room to put this anywhere, what I'm then looking to do is say, okay, can I put myself in a position where I market today, lock in a price, but do I look for opportunities over the course of the next couple of months, some sort of re-ownership strategy to try to give myself an opportunity to open up some price discovery as we move into winter into next spring, still on those bushels, thinking about this as I have to make a move because I don't have the room to place it in there. But that doesn't necessarily mean I have to take that price and swallow it completely. If
Mhm.
I'm willing to risk a little, are there ways that I can extend my pricing window beyond just that flat sale? Because I don't think most of us want to just lock in the price at harvest time, that we're looking to any sort of mechanism. And typically, the mechanism we like to use is storage to try
Mhm.
to give us that window of opportunity for prices to improve.
Yeah, I think a little bit of it too, and get your 2 cents on this, but it feels to me also, though, as I look at like our profit manager clients, those who have some sold, and if they say they do have a 20% overrun or something, they plug that in at, let's say, $4 or whatever. And if they're at 30% sold already, there's, maybe let's say at 450 or whatever, and we're using corn as an example, the same would apply to soybeans or whatever. But, they're looking at their average price. It's still not too bad. I mean, it doesn't bring it down that much to where I almost wonder if a person just sticks a fork in those bushels and those are overrun bushels, and let's pay attention to the balance of the marketing. Is that a worthy thought process too, or do you think you really need to go after tacking on to those sales, or what's your thought there?
Well, to me, it really depends upon, the financial situation on
Well, the
your
whole
farm.
farm, yeah.
The idea is if it's not too big a blow, then yeah, I understand that process. At the same time, too, I know a lot of farmers are thinking, yeah, no, we've had, you know, a couple of bad years.
Mm,
I mean, the idea is we went from, record net farm income back in 2021 and 2022 to now we're down significantly from those levels. And so I think it's more a case of, do you feel you need to chase after that? Because this is one of the things you say. I mean, we could just stick a fork in it, be done with those bushels, and concentrate on what we can put in storage. Um, if you can do that, no, I understand. That makes a lot of sense to me. On the other hand, if you can't, I think it's always good to be thinking of when you're evaluating those opportunities for the bushels you have in storage. That also might provide some opportunities for you to utilize those same strategies maybe in a re-ownership if you see higher prices moving along the way that
mm,
you could do with the bushels that you had to move at harvest time.
mhm,
Now, the risk is though, that usually costs some money up front, and you want to make sure that you see a big enough opportunity that you're able to recapture that investment you're going to have to make.
mhm.
There's no guarantee here
Yeah, right,
that that's going to pay off, but if you don't at least evaluate those opportunities, you'll never be able to capture
right, right. Last part of the conversation as the economist in the discussion here. Um, and we look at the farm economy and we look at, as you were just talking, looking at the margin for the business, are we making any money? Are we breaking even? How much are we burning up working capital? What's this situation drives the question. I think we're seeing some money come in through the disaster payments and some other things. And one of the things that we've been doing is looking at that in terms of taking the total dollars of revenue that come in. We call them you know, the pennies from heaven or whatever, that are showing up, which are a good thing and a bad thing. The problem is the good part of it is it levels things off and helps us out as farmers. The bad part of it is it seems like, and at least in our data, the farmer ultimately eventually keeps about 30% of it. About 70% of it goes back out in land rents and equipment and everything else. So it's a sugar high and it helps for a bit, helps with interest rates and some of those things. So I guess what I'm asking is for you to give some perspective on if those dollars come in, and let's say that it's 200,000 on that farm with corn, it adds another 30 cents a bushel of cost reduction or price increase, which gets us where we need to be. Are you a more aggressive marketer, or are you still waiting to try to capitalize on a higher price? Because I guess we like to look at those dollars and as, they're dollars from heaven or whatever, quote unquote, but they're also, kind of need to be looked at as part of the price of what you're getting, at least on those dollars that come in. We never do that on a projection. You never project you're going to get anything from the government. But when those dollars come in, even though they're from a previous year, they come in this year, and we like to look at them in terms of what does that do on a per bushel basis. If we take that dollar amount and divide it by our production, is that it's doing one of two things. You can either look at it as it's increasing your price or it's decreasing your cost of production. I want your perspective on that as an economist.
Yeah, to me, it does make sense to incorporate those as you're looking at your decisions this year. But I also liked what you said about you don't always plan on that investment coming in.
Right.
We know the vagaries of farm support, especially as you mentioned, over the past few years. It's been ad hoc disaster assistance, meaning that oftentimes this is not part of the traditional federal farm program. It's just that Congress passed and allocated a certain amount of money. We can't depend upon that, nor should we build that into our long-term plans for the farm. But as we're looking at our short-term decisions here, I think it does make sense to incorporate that revenue into calculating our final. Um, I like to think of it as looking at it as part of the final revenue or price side as opposed to reducing the cost. Because again, the idea is our costs are what we can control on our farm. Our revenue is what we can get from the
And
market, and then, the government is supplementing that some years and
mm-hmm,
may not supplement it in others.
mm-hmm,
So I like your pennies from heaven argument. The
mm-hmm,
idea is, yeah, it's money that we can incorporate in to see if we're breaking even this year, but it doesn't make sense to adjust our costs to fit that revenue.
right.
We need to still think about our costs, trying to line that up against what the market will provide for us as opposed to trying to figure in those pennies from heaven.
Mm-hmm. Yeah, you're right in line then with us, so we won't have to have a debate or argue about it or anything. So, awesome. I appreciate that perspective. I guess the last thing I have is what do you want to leave farmers with as we march toward harvest, keeping an eye on the crop, keeping an eye on the markets, and trying to keep our heads on straight and have a positive attitude, I guess, is my thing that I think we need to try to manage to the best of our ability. But what do you want to leave producers with as they head into the next couple of weeks in terms of just managing the operation?
Well, in this case, I always remind folks about, agriculture, like other pieces of the general economy, goes through cycles. And right now, we are in a down part of that cycle. But I'm looking at, as we're looking forward, and especially in this case, I want you to think about the demand side of our markets. As we look at the data as it currently stands right now, USDA is showing for the 2024 crop that we're looking at record corn usage by nearly 400 million bushels this year. We're seeing very strong growth on the soybean side as well. Not quite a record, but again, in the top five. And so we're starting to see that usage building up to try to catch up to the supplies that we've got. So to me, that shows that, if you will, the seeds of the next upturn in agriculture are being planted right now. The idea is, we've heard the old joke about, when we're up high, what's the cure for high prices? Well, it's high prices. And I would argue the same thing works on the bottom end. What's the cure for low prices? It is low prices. Because low prices tend to stimulate that growth in usage. And that's why we go back and forth between the two. That supply and demand are reacting to the prices that we're seeing here. So it's more a matter of recognizing that, yes, we're in a down slope right now. It's a temporary thing.
Mm-hmm.
That as long as we plan and can manage um, the losses that we're seeing now, we want to set ourselves up for the profitability that will come later.
Mm-hmm.
So managing our costs to fit now will pay us in the long run. It may not necessarily lead us to profitability today, but it sets us up for profitability in the long run.
Mm-hmm. I think that's good perspective because, we can control the controllables. There's some things we can't control. Control what we can control is my takeaway from what you just said, manage those controllables and try to keep a positive attitude. And we are in a cyclical business. It will cycle back the other way. We just got to survive in these troughs. That's kind of
Mhm.
the main thing. But
And that's the deal. If you look at agriculture throughout history, that's what happens.
mhm,
You know, the idea is we'll have 2 to 3 years that are really good. We tend to slow down again, go through some doldrums, and then back up again. And about, you could figure the average cycle within ag, it lasts typically about a decade.
mhm,
And so it's not that you necessarily have to be down the entire time, though, but what we tend to see is a few years of a peak, a few years of a trough, and then there's, if you will, a few years stuck in between as we go down and we go up.
yeah, that's really good perspective, and I think it's good perspective for some of the younger listeners too, because I think especially those who started farming maybe say 5 years ago, who went through some really good times, and then it's kind of like going to Vegas and winning some jackpots the first couple days you're there. That's bad news for later on because that doesn't keep happening, right? And
Oh, yeah.
we are cyclical, and but I always say, and it's a message that I like to keep in mind is that low prices will make us much better business people. High prices don't necessarily do that.
Yeah.
They can drive us the other way. So I think we just gotta manage. But as usual, it's been a great conversation, Chad. I want to get you back as we get a little closer to harvest. We're not going to do it in this conversation, but I want to start talking a little bit more on the cost of production side of things with you a little bit from the economic perspective, managing fertilizer and seed and crop protection and some of the things that we're going to need to be thinking about for 26. But we'll catch you on those topics the next time we corral you.
Look forward to it.
All right. Thanks, Chad. And again, thanks everybody for your time. With that said, make sure you're checking out 19 minutes. I'll make sure that Mac has that in the show notes. Click on that and check it out. With that said, thanks a lot. We'll catch you again next time on the iView Pitch.